Good morning, traders. I hope you're all having a wonderful day. We're going to be going over the Sunday price action analysis. First on the S&P 500, and then we'll come back to QQQ. So the S&P 500 is now trading inside of this range here from 433.25 support to 457.87 resistance of the zone. We have retested the support twice. We have retested the resistance once. So it is a good possibility that we may retest it one more time before coming back down and then finally breaking out. So there's a good chance that the S&P 500 can consolidate here for probably until November, and then finally in November move back up towards 457 into mid-December, and then from there break out towards the 490 area, which would be a retest of the resistance on this bullish channel. So if I draw the line here, we have been going up and down inside of this channel here. So we could be maybe we won't go down as we have been in the previous times, and the reason why is because now we have a changing structure. So we were in this bear market where we were retesting the 200 SMA line, selling off, making lower lows, coming back up for a lower high structure right at the 200 SMA line, going back down for another lower low, and then finally came back to the 200 SMA line. This time placed a suspecting higher low structure, which then led to a higher high above this recent high there, and from there what you saw was an accumulation taking place above the 200 SMA line to turn the 200 SMA line from a downsloping trend to now flattening and then finally rising higher. So what could bulls be doing here? They could be creating this rally and then base for another rally as the moving averages, which is the home baseline, catches up, and bulls get a retest at where the demand is going to show up, and finally we get a breakout. We get a major leg higher from this breakout to take out the 480 highs, and not only take it out, but we could go as far as retesting the 490 or even the 495s, making a new higher high on the S&P 500 if 433 ends up holding in the next 2 to 3 weeks. Now, team, do understand that, no, not in the next 2 to 3 weeks. Pretty much, this level needs to hold for the next 3 to 4 months here. So this means going into the upcoming CPI data this week on Wednesday, and then also going into the FOMC meeting, which is the rate decision from the Fed Reserve on the 20th and the 20th. So and that's in the upcoming week after this week. So be ready. A lot of news to move the markets. Now, for the downside, I am looking at this potential head and shoulders. I'm not entirely bullish, and the reason why is because the current economic conditions don't really align with the markets to get the momentum that they need to push higher, especially at these levels where bullish overhead resistance is very strong. So what am I talking about here? Let's take a look at this weekly chart here on the S&P 500. This is the COVID. This is the COVID lows here, the COVID crash. This is the 2018 crash. And the 2018 correction. So all of these corrections had retested the 200 SMA line on the weekly chart, and then moved up, made new highs, and then finally came back down to retest the 200 SMA line. And this happened back in last October, which was in 2022. This is This is when the CPI data came out. We finally had a blow off the top, a blow off the bottom scenario where we placed a liquidity trap to the downside. Finally came up, placed a bullish hammer or an indecisive doji, which still comes out to be bullish if placed at a lower low structure. And then from there, you saw bulls come up, and so far we are seeing another retest here. So this is what happened here. The reason why I drew this line is because if you have two tests, right, for trend lines, when drawing trend lines, these are the rules. First, you got the origin here. This right here is known as the establishment phase because the second test establishes a trend line, and then the third test finally confirms it, which will have the biggest reaction. So the third one being confirmation, being known as the confirmation stage, that one is where you trade off of the trend line. So what does that mean? Well, that means that since we have established the retest since we have established a test there, what now we can do is we can go down as at a loss of 433.55. We can go far down to retest the 200 SMA line one more time. And at the retest of the 200 SMA line, also retesting the previous breakout range of this zone here, we can move back up after a clean retest and then finally come back up to 445. This time break this resistance at the third confirmation and then move back up to make new highs. This would create a nice cup and handle formation as well here as shown on the weekly chart. So I will be watching that possibility as well. And why do I think that this is a good possibility that can play out? Well, first of all, we can clearly tell that there's just not a catalyst to push the markets higher. And with everything that's coming up, with energy prices increasing higher, there's more pressure on the CPI data that's coming out, so that could come in hot, and then that can also add pressure to the Fed Reserve to also continue to raise rates. And if they continue to raise rates, then that will be problematic because investors are expecting for the markets to push higher. Investors are expecting the Fed to pause in the upcoming FOMC. So if that doesn't happen, then you will get a tantrum from the market, and that will send prices all the way back down here with some of the inflated stocks such as Meta for one. Meta could give back some of its gains down to 259. Another stock that could give back some of its gains is Nvidia. Nvidia has been highly inflated and finally seeing bears taking over. We have a bearish engulfing on the weekly chart right at the resistance of the 478. This now establishes as well as confirms the resistance. So there's a great chance that this time, if bears do push it down to 400, they're not going to stop there. They're going to take it down to 374. And I think if they do take it to 374, there may be a great chance that they can take it as far as 310. But for now, let's just target 400, and if 400 is lost, 374, where we expect buyers to show up because this is where the order blocks are for this particular stock on the weekly chart. The order blocks are right there between that in that wick. So this is going to be the retail stop loss, and once the retail stop loss is hit, it's going to go down to 374, and this is where it's going to get a concentration of buyers potentially to sweep it back up. So I'll be watching that. And let's take a look at some stocks I have on my weekly watch list that I'll be watching. So we talked about the bearish case for the S&P 500, right? Now, despite saying that, the S&P 500 can potentially go down to 410 area. I'm not going to short the S&P 500, and the reason why is because banks are looking really good here. And if the financials do push higher, then the S&P 500 through other sectors can continue to also push higher, and that will put a dent on my put positions. So what I'm going to do instead, I'm going to short where the weakness directly is, which is the QQQ for and QQQ is pretty much a concentration of tech stocks. For QQQ, Apple is about 7%. Microsoft is around 6 to 7%, and Nvidia, Meta. So a lot of these stocks are part of the QQQ, and there is no financials. So if financials do push higher, right? QQQ, which is the Nasdaq, is mostly made up of non-financials. So if financials do push higher, then there's no pressure on QQQ to also push higher as long as tech is weak. So QQQ had a retest at the resistance there, also establishing that trend. And since this is a second establishment, you can think of us being in this cycle right here. We are pretty much in that cycle right there on the bigger time frame. So that may send prices all the way down to 433 before we end up going for new highs back up towards 387, and then finally breaking that and pushing to new highs. So there's a great chance that we're going to get a pullback from here. And yeah, things are just not looking good on tech. There's a lot of pressure on tech. Meta stock price action failed to break out from the bullish ascending pattern here, rejecting the supply zone up ahead at 407 right there, and it ended up selling off. So it rejected that level twice in 2 different days and sold off right back down, leaving these very bearish reversal candles. So if the stock continues to show weakness, especially when we go below 395, that can trigger a major sell-off back down to 276 here first, and then it won't stop there at support. This time it's going to lose support and push all the way down to 259 before getting some real buyers there. So for this particular bear trade idea, I will be buying to open Meta December 15, 250 put at 5.80 premium area, or maybe or just somewhere around that area. And as long as Meta doesn't hit the 306 price, I'm going to continue to hold my Meta position for the targets that we mentioned down ahead at 276 and then 259. For swing trading, you can put a stop loss on the main securities price action rather than the derivatives traded in this case, which is the options for the 12/15 expiration. The reason is because as long as the level is not broken, there is no confirmation for bulls to break that level, and this in turn will send price action in the other way. Some extra thought process on how you can start placing stops on my recommended trade ideas into the future. So again, why are we bearish on Meta? The reason why is because with energy prices skyrocketing again, putting some numbers in on inflation, the impact from the upcoming CPI data can send a shock to current elevated prices. Once smart money sells, the algos will sell within as they follow in the most efficient way than retail. So once you start seeing algo sell back down here, this is where the retail ends up selling, and that ends up with stop losses down here. That ends up triggering their stops. Some may not even cut, and that sends prices all the way down to. And the way that it works is because retail ends up buying right around here. Retail ends up buying far out of the money calls, which in turn leads to institutions as well as algos selling far out of the money to hedge their positions because of the increased gamma, and this in turn leads to the volatile prices that we will see going forward in Meta. However, there are two stocks that I'm bullish on tech, and this is Microsoft. Microsoft is one of them. Microsoft is just about to break this major resistance line at 335. It did break it on Friday, sold off a little bit, but this is amazing because now we are using the wick to continue to push higher. So the way that the market pushes is you see these starting candle interval manipulations where you may get a sell off down to even 333, but then what you will see is a break above the wick, and this is what continues the trend. Once bulls get above the wick at 336.07 into Monday or Tuesday session, Microsoft is going to get major upside follow through towards 343, and that can be very profitable on the tech side. So, on the tech side of things, the only bullish stock that I'm really looking at is Microsoft. So, keep your eyes out on Microsoft. Now, I did mention banks earlier. Banks are looking really good for a potential reversal here. There are some bank stocks that I'm watching. This one in particular, GS, Goldman Sachs. I've been playing this stock every single time it has created a zone down here, team. So again, same zone happening, and this time the reversals are as strong as the previous candles. Things are looking amazing. We have a double bottoming formation here, a very nice double bottom down here. And things are just looking amazing for a break back up above 342, filling the gap and pushing all the way back up to 346. This would be very profitable if we can get a push back up there. Now, the way that I am trading GS is with a long-term contract, buy to open GS January 19, 2024 call, the 360 call at 6.0. For this trade, the way that I'm trading it is a swing trade. My stop loss is very firm. I have a stop loss at 320. So if they go down to 320, it throws me off of this trade. And as long as they don't go down to 320 and they head towards my profit targets up ahead, I'm going to be very happy, and yeah, our targets will be met. So, with a firm stop loss, I'm going to be confident to meet my profit targets. Um, Honest to God, this trade will be amazing to even take profits at 340, and around 340 we can expect some consolidation range to come in before pushing higher towards 363 area. The reason why I believe that this time we're going to get a break above 346 is because of the amount of times that we have tested this level, and if we come back up one more time, they're going to easily break it, because this time price action will be very certain, since it's regaining the 200 SMA line, sloping it higher, and pretty much has absorbed all of the liquidity around this resistance level up ahead. You can also, personally, I will also be trading a November 17 350 call at 4.0 on this trade as well, because the contract is good, and this trade may be maybe a 70 to 130% profit on a 2 to 3 day swing trade, based on the momentum move that we're going to get a follow through above 327.50 into Monday or Tuesday. GS is more for the expensive accounts. Now, if you have a small account and you're watching WFC, or if you want to play shares of WFC, or the banking sector rotation, the potential banking sector rotation, you can trade WFC, which is very cheap. It placed a bullish hammer reversal right at the retest of the 30%, and this is the third retest at the trend line. So once you get a third retest at a trend line, that is known as a confirmation, and that triggers an imbalance move all the way back up towards the resistance lines here, which is 47 area. So from 41 to 47, that's a great move on WFC, and contracts are very cheap, going very further out. You can see that the 42.50 call for January 19 is only 2.10. You can even go further out to June 21st, which are much further out, and you can buy the 45 call, which is just $2, giving up $2 of strike price for much more time. And I think this will be a great strategy, because you're doubling up on your time. You're giving yourself plenty of time, and since your profit target, since our profit target is around 47, 45 still gives us $2.50 to go in the money, where the contract can gain significant value, underlying price value. Now, another stock that I'm watching. So again, WFC and also Bank of America. Bank of America also looks really good. It did lose the trend line, but I think this is a bear trap for Bank of America to push all the way back up to 30.95, and this time break out towards 32 and then 34. Now that we have talked about banks, let's talk about one more industry that I'm watching. So American Airlines. Now this one definitely may have a little bit more room to go to the downside, but same thing with same example as GS. It is creating these zones here that has been attracting major dip buyers, and it can do the same thing this time. So it may first retest it here and then reverse back up, and even if it reverses back up, don't be scared of missing out. Wait for the next leg to push higher before the stock moves all the way back up to 19 and retests the upper line of this wedge at 20.95. That concludes my analysis. I do want to add something that I'm watching. So Tesla, I'm not really going to be trading this one, but for those of you that are going to trade it and would like to see my analysis on it, it's pretty much it was in this higher pretty much in an uptrend, right? Higher highs, higher lows, higher highs, higher lows, higher highs, and then finally you saw a lower low, lower high, and then a lower low, and then could this be another lower high structure here? So this could even be a bigger lower high structure towards this one. You can see that it's rejecting that trend line very clearly. So is this a lower high structure before another sell off back down to that support level of 212, or is this a bull flag the same way that we saw in the previous times? So how did that play out? Let's take a look. We saw this rally, and then we saw this base formation, and then another rally. And if you are part of our mentorship program, you know that once a rally base rally has played out, you can remove that and you can create even a bigger price action trend. And now this looks like a bigger rally base, and so far market is waiting for a break of structure from either sides, signifying that so since this is a potential rally base, if bulls hold 243, which they did, and then they go back up to 259.04 and break that resistance of the zone, then they're going to get what is known as a rally base rally, which is one of the four supply and demand formulas that takes place in the markets over and over and over. So this rally base rally can send price action all the way up to 281 area. Now, if this is not a rally base rally and this is a lower high structure with clear bearish weakness, with clear bearish strength here and bull weakness, as we saw here, bulls had that demand candle that was countered by that supply candle, which was then taken out by a demand candle. But again, bulls were not able to confirm that, and sellers came back in, and sellers continued to place a lower high structure. Now, there is no break of structure yet. However, just be on watch. Once Tesla goes below 243.12, this stock will have plenty of downside room and may not even come to a stop at 212. It may go down all the way to perhaps 160 area, or even 154, before it sees the next major imbalance move towards the 297 area in the future. So definitely be eyeing this level here. I'm not saying that I'm fully bearish on Tesla. It is not a stock that I dare to short, but it is something that I want to bring up with the team in case you guys are planning to trade this. Just watch this. Don't have any bearish bias. Just watch the break of the zone, and wherever they break from, either below 243 or above 259, make you trade based off of that. Do not trade inside of the zone because it can break either way. All right, for this, now I am also watching Disney stock. This stock has been selling off nonstop for the last three to 4 years, and it could finally be placing a bottom because we are seeing a lot of bullish divergences here where despite price action going down, you're seeing the RSI maintaining the 30%, and buyers continue to show up. So what we saw here, this could be one of those levels. Like this could be this range right here could be this, or it could be this one before you get a major move back up, where you see price action going as far as 118 or even retesting the 126 resistance for bulls to try and get some structure break. So considering that this is a bullish falling wedge and that we have been tightening and tightening and tightening, this is like this is like tightening something, tightening something, tightening something, and then at one point you're just going to see a major pressure hole, and that's pretty much what can be seen here on Disney. This tightening formation is known as a bullish falling wedge, and what happens is as soon as you get a break of structure above where the lower high structures are, and you finally get a break above the lower high structures, that changes the trend and triggers a major short squeeze operation. So I will be watching that. And how am I going to play that? I'll be playing that with long-term contracts. For example, something like January 19 or June 21st. So this June 21st, Disney call at the Disney 100 call is trading at 3.50. It has 12,500 open interest, and it is about a 3 to 1 profit to risk. So I will be watching Disney, and I may buy this contract here for June 21st. I'm also watching the January 19 for a much more aggressive bullish trade on it, considering that we are at a lower low structure and the chances of a reversal here is very high. So if that turns out to be the case, I may go for the 90 call. But just to give myself more time, I'm going to go with the June 21st, 2024, and I'm going to buy the 100 call at 3.50. All right, everyone, that concludes my analysis. I hope you all have a wonderful day. If you guys have any video ideas that you would like me to do, feel welcome to share the idea, and I will be more than happy. All right, everyone, take care. Have a wonderful day. See you all. I hope you took some notes for this things that I shared, so that you can use it going into the following week as your price action analysis. Take care, everyone.